Welcome to the Property Couch, where each week you get to listen to two of Australia's leading experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle Channel, co-host of Escape from the City on the ABC, and partner of Empower Wealth Advisory. Ben Kingsley, chair of Property Investors Council of Australia and the founder of Empower Wealth Advisory, named the 2018 and 2019 Property Advisory Firm of the Year. Stay tuned as they bring you the insider's guide to property, finance and money management.
All right, folks, welcome to the Property Couch podcast. Welcome back to you too, Ben. How are you?
Good, mate. You?
Very, very good. So, mate, you're getting into the swing of things now. This is week 3. You should be in full form now.
Like I haven't left, mate. Like I'm back on the bike, feeling good, getting into the flow.
Yeah, nice. Good to have you back. So the last couple of weeks have been fun, mate. Today is a fun day too. We've got a very special guest today. We are going to be talking to the founder of Finder. So stick around. Founder of Finder. But before we get there, Ben, you have got an upcoming webinar for Picker.
Yeah, look, just a teaser for Jane Slack-Smith's going to be joining us. I think in a couple of weeks' time. So we'll make sure we circle back. But, you know, if you're a member of Picker, we'll obviously email you with the details. But as I get more and more of those details firmed up, but yeah, she's an A-grader. So not one to be missed there. And that's potentially on renovating for profit and a few other little ideas there, I think is my understanding. So that's just a little sneak peek for those members of Picker that we've got another great guest coming up to educate us.
Yeah, very good. Check in for that. Before we go to our interview today, the Mindset Minute theme is the reference is Deborah Folletta on the internet. And it was just a context, a juxtaposition thing. So marriage is hard, divorce is hard. Choose your hard. Obesity is hard. Being fit is hard. Choose your hard. Being in debt is hard. Being financially disciplined is hard. So choose your hard. Communication is hard. Not communicating is hard. So choose your hard. So life will never be easy. It will always be hard, but we can choose our hard. Pick wisely. Thought, interesting. It all depends.
To the point. Absolutely.
On the angle through which you look through life, Ben, because either side there's a price to pay. And quite often people, I don't think, really assess the price that they pay on some of the what seem like easy decisions up front. So, and I thought that might be a nice little segue for our interview today, because someone has chosen to look outside the square and see different challenges from different angles. And I think I'm really looking forward to chatting with Fred Schebesta. Now, we spoke to him a little earlier today, Ben. It was a far-reaching interview that we had with Fred, but some interesting insights.
Yeah, I'll look, for those who you're about to go on a journey of discovery, and what you are seeing is the power of mindset and having, you know, and potentially swimming against the stream, right? You know, swimming upstream and looking at different things in different ways. So obviously very successful, one of the, you know, probably top 20 richest people in Australia, you know, sort of under 30 at the time. So yeah, it's
under
certainly
40,
under 40, sorry.
Yep.
Yeah, he's definitely going to be an interesting feedback. I think it's going to be a really positive show.
Let's talk about it at the end of the interview, but let's cut to the conversation that you and I had a little earlier with Fred Schebesta. All right, Ben, we've got a very special guest today. We are talking with Fred Schebesta, who is the co-founder and CEO of the comparison website Finder, which is one of the world's biggest comparison websites and money apps, which helps users compare products across 105 categories, from car insurance to cruises. It operates in 83 countries with a staff of 400 plus people. And Fred, who went from working in a Pizza Hut call center as a university student to running a business employing 450 plus staff in 80 countries, and now has a net worth of 214 million. He is the author of Go Live, 10 Principles to Launch a Global Empire, and he's here today to share his journey with us. Welcome to the Property Couch, Fred.
Thanks very much for having me. I appreciate it a lot.
That's a pleasure. Looking forward to chatting with you. We have a mutual publisher, so it has been really great to have a connection with you. I had a little chat with you a couple of weeks ago to set up for the conversation today, and I'm really looking forward to a really what could be a broad-ranging set of topics. But the first one I want to ask you is clearly, if you do a Google search of you, we can see a whole bunch of numbers bandied around regarding your money, your worth, the properties that you have. But I'd really like to go back to the beginning and see if we can find out what money discussions were like for you growing up over the dinner table with your parents.
Geez, that's way back in time. We talked about money. I think my parents just talked about money a lot. Money was always a topic in the house. I don't think investing as much was, like, a little bit. I think it was more, how to get money, what the value of money, frugality, things like that. I think were very important. I think, it was always a bit of a challenge. Money was a challenge, and that's just, the way it was. I think the investing was something my dad talked a lot about. My mum was very much into, and still is into, property investing, and she used to influence me in that direction. But I think my dad was more in the stocks direction. I think that's where I've spent a lot of time investing in stocks and continue to, and obviously property as well, cryptocurrency. I'm open, and obviously seed rounds, and investing in businesses. I have a pretty broad range of view on investing, and but that was the beginning. I don't think my parents were much more, they ran their own, I guess, little small businesses as doctors. That's what you kind of do. And then you kind of build up your practice, and you build up your list, and then you can sort of go from there. Very different approach to building a business. It's more about care and sort of things like that. But yeah, very, very much, I'd say it was a topic we talked about.
Which is interesting, Fred, isn't it? Because ultimately most of the challenge in most households around building up financial confidence and strong mindsets around money is that it was a bit of a taboo topic to talk about that. So what were some of the conversations? Were they more around the mortgage and paying the bills and the groceries, or was it more about money making more money for you? What was some of that sort of DNA that you were brought up with?
I think, talked about house prices and interest rates, definitely. We talked about just like a plan, having a financial plan of where to go and what the future might look like. And I talked about stocks. I remember sitting, every morning I would sit, and my dad would read the newspaper. This is like way before the internet. And I would always take the cartoons and the share prices out. And I just wanted to see what the prices were. My dad gave me a few stocks early on. I checked the prices and trying to understand what's moving it and why is that. And, I didn't really understand. I just wanted to know the number and calculate my net worth, a couple of $1,000s. And I was super happy about that. I think, there wasn't really compounding. Compounding of money was a concept, I think, about saving money. And then, because back in those sort of days, you used to get interest on your money. And so I think that was, that was compounding your money to some extent. I don't think that there was any sort of venture or entrepreneurial or those kind of things. This wasn't really spoken about. It's just sort of the 80s, 90s. It's not something really as much spoken about. I think share trading and property were mainly the topics.
You've got young children. Well, I know you've got a little baby at home, Fred. What's your plan to have dialogue around money over the dinner table when they're a little older? Will it mirror some of the messages that you got from your own parents, or will there be some unique spins that you would talk to them about? Probably wasn't cryptocurrency talked about back then.
No, it wasn't. No. It was interesting. I've got two little girls. One's 12, one's 8, and my son, who's 7 months. So he doesn't do much talking yet, there's a lot of screaming, a lot of noises. So he's pretty vocal. Well, we talk about money, a lot. And I have a couple of, sort of radical rules around money. And one of them is I refuse to pay them any pocket money for doing jobs. You can ask for as much money or as little as you want from me, but you need to give me some good reasons. And I want to see a presentation, and they know they're going to have to negotiate for those reasons. And, if they want to buy something. So I'll give you an example. So I recently bought for my daughter's, she just turned 12, a gaming computer. And she knew that it was like, to get that computer, she was going to have to campaign hard and influence and present and talk about the problems and set it up. And, I continuously said, no, like, and I'm going to need more reasons. That's not enough. I don't agree with your reason. I was like doubting objections. Like, you're going to have to pitch to me hard and back it up. And this campaign went on for several months. We went to the computer store. I took her to the store and I said, okay, these are the stores. I'm going to look at the prices. Here are the prices. We need to negotiate the prices. Who do you want to work with? Talk about supplier relations. And you need to pay for this. Like, I'm going to pay for it, but I'm going to give you the card. You need to go and negotiate that price. How are we going to do this? What's the really, really deep dive into this decision point. And that's the part that I care more about. Less about the money. Money to me is, it'll come in all sorts of different shapes and forms, but actually making that purchase decision, I think, is just as important as saving money. How you buy something and the value of buying something, negotiating, hustling, dealing, negotiating, with the actual supplier. So I'm like the shareholder, she's asking for money to tip into her business, and her business needs new technology to grow and expand. And I asked her, what's going to be your plans for your business? And like, what are you going to do with this computer? And it's the same thing. It's just done in a more, I guess a
structured way,
digestible way. Yeah. It's not so much using business language, I think, is a little confusing. I wanted to know her plan. I wanted to know what she was going to do with this, and, why is it going to work? And I asked her lots, she's going to stream with it. She's going to start to play new games. And like, okay, what games are you going to play? Why are you going to play those games? What's your view on this? And, just really getting into imagining I'm really trying to teach them how to venture, how to be an entrepreneur, and how to deal with anything that comes up. If I ask my daughters anything, it is going to be a tough negotiation to get them to do something. And I love it. Like, I remember, I proposed something. They're like, no, Dad, listen, this is how, like you said this last time, we've talked about this conversation. It's like goes on and on. It's like, how about instead we go to here? I'm like, no, okay. And then, so it's essentially, I'm trying to teach them the skill that I don't want them to trade time for money. I want them to avoid that, because that was my first business, and it wasn't a great business. It was a tough business. I want them to think that creativity and differentiation is the key. I think, as opposed to just blindly trading time for money. I think there is a different path.
Well, you talked about creativity and differentiation. That sort of mirrors your path. You started, from what I read, as a Pizza Hut in Pizza Hut, and then at uni, instead of doing your courses, you were working out how this internet thing was working. You were trying to build a business. You sold your first one, but then with the current business you have, correct me if I'm wrong on the detail here, but you got a Google slap in 2011 around how you were attracting customers. Can you tell us a little bit about that, and then how some of that creativity and the differentiation sort of led to where you are today? Because you're one of the great Australian success stories, but it wasn't always that way. So it'd be nice for our community to hear what it was like in the beginning for you.
Yeah, I think in the beginning we used some I'd say gray tactics to, they would be considered quite black these days, but back then they were gray. It was not clear as to what this meant, and there was no written document from Google. So we worked out how to, encourage Google to rank us highly in their results set. And I guess, you get success, and then you push it, and you want to get further and further, and higher and get more and more traffic, and do it in more places. And, you start to figure out where the wire is and where the borderline was for Google. And they really upped their ante in terms of quality and results. And we just pushed it too far. I really own that. I sort of really championed those tactics and kept pushing the limit because, everything we did made more and more money. And that's tough to not go down that path, right? In the beginning, but it was not a good time. It was a very dark time. It was a good 2.5 months of, we lost 80% of our traffic overnight, and the business was genuinely at threat. But we were committed to bringing it back. And I think 2.5 months is a pretty long time. Like you think about like today, and then you think about a week time, then I think about several weeks. Now think about a month. Now think about 2 months, and your company isn't back. And it was just a brutal time. It was a dark time. And we really overhauled everything we did, which is great. I think it's, we started to build a brand. We started when we got our rankings back, and we started to, try other tactics and other methods to get traffic. And I think that was the beginning point where we started to invent ourselves as a business and not just a marketing tactic, which is, a pretty big change.
So Fred, I'm interested in, obviously you've had a household which has been very open around money and obviously building wealth and investing in shares and property. Do you feel like that was a catalyst for the risk taking that you did? I mean, yes, your first business, you traded time for money, but do you feel like that gave you the confidence? You talk about a growth mindset as an entrepreneur, and that's in your course. But in terms of, I'm keen to sort of say that how much of that upbringing that you had led you to sort of want to take these types of risks and sort of step outside your comfort zone?
I'd say probably my upbringing was probably conducive more to a very conservative, traditional approach. Okay. Completely, yep. I would say probably the opposite. Yep. I just think I have a rebellious nature in myself that I wanted to do it differently.
Yep.
And so I saw every single way that you can conservatively approach the world, and I wanted to prove that it was possible to do it another way. And I think, that's probably just the jumping off point to begin that journey. And because of that, I had to make it work. I had to find a way. And not just, from a place, back then it was more of a place of survival. And I think once you go past survival, then it's a different story. Then it stopped being about that. It started being about, oh, wow, we've created something here. Now what? And that's a whole other journey, another different mindset. I think now these days it's like, how do I be even more creative? How do I create something that's like just remarkable? That's really, I think, where we've started to go, which is really cool, like amazing. And I enjoy that. I think going back, my parents were like really annoyed with me when I left actuarial studies and computer science. And, I failed programming languages. I went back and saw my university thing the other day because I was doing a US visa application, and I coded the Finder site, and I failed programming languages, which is, it just shows I probably learned a bit here, but I applied it on the internet. So it wasn't like I was, I just didn't really care about anyone else thought of my programming skills. I think the programming skills are now, here to be seen. I think that's just a different mindset, right? It's about my own challenge and my journey versus someone else's determined.
Was there any thinking about the fact that if, let's say, you did challenge the world and you went off and you became this non-conformist in your approach, that there was a safety net back home in terms of, mum and dad could catch me if something didn't go right? Like, is there been any thinking in that space?
I think I just always felt comfortable. Yeah, in that sense, I suppose. I don't know. I didn't, I would always, come to them when I did have something majorly go wrong, but pretty much everything when I got divorced, that was a pretty, tough time. And I went and spoke to them about that. And, it's a pretty big change. I needed some counsel. And they just said, look, we're going to support you. It's your journey. And I was like, oh, thanks. That's awesome. I think when it came to pretty much everything else, my parents kind of stopped trying to influence me quite a long time ago. They make their suggestions and I would, hear what they said, but it was clear I'm going on my own journey. So, and I love that and I own that. And I take the wins and the losses. They're all mine.
Can you take us back to the beginning, Fred? So you've got a comparison website, but at the heart of things, it's a similar mission to ours, which is to help people do better with their money, right? So you were trying to help people back then, credit cards and insurance, get a better deal. Where did that seed get planted? Where was that vision sort of born for you? Because clearly there's a noble purpose in that, but you've turned it into a great business. But really, it was trying to serve your customer base to help them get a better deal.
Yeah, I think that was probably an afterthought. I think that's what we realized we were doing, but I don't think in the beginning I set out to do that. I don't think I could own that. I feel, just very humbly, I just wanted to create a business which made money while I slept, really. And I wanted to rank really highly in Google. I thought that was really cool. And then I realized, well, you've got to create a website, and the website we created was a comparison site. And I think just by chance, I realized that actually helped people a lot. And I didn't realize that. And then through that journey, I realized, hey, there's probably a bigger thing we're doing here. What is that? And I think that's, going back to your question, really, like, what's the purpose, Bryce? I think that's not an easy question that a lot of companies come up to. Like, what's the purpose that we all turn up every day to deliver to our clients? Like, why do we do this? And I would, unfortunately, I didn't have that answer in the beginning. I think that was an afterthought, of just doing some cool stuff. And I think it was a miracle in the beginning to have a business which, we didn't trade time for money. That was a miracle for us. We were, 26, 27 years old, 28, not like, little young boys really. And we'd have a huge university of hard knocks in the first business. And so knew where not to drive down. But didn't make a big, profound statement and then go after it. We just sort of worked it out afterwards, I got to say.
Mm. How do you feel about numbers being bandied around in your name? So in preparation for this discussion, I obviously went into Google and to try and find out as much as I could. And, Fred Schebesta wife, Fred Schebesta net worth, the property. So all these things come up. And I quoted a number that is not verifiable by anyone because you've run from my understanding, of private companies. But how do you feel about people bandying around numbers that are in the several hundreds of millions around you? Is that something that you embrace, or is that something that what does that feel like for you?
I think it's I don't know, people like to talk about that stuff. I don't really think about it at all. I just carry on. I think it's a celebration of the crew at Finder and what they've created. And I think in also, hopefully in some small way, I created some things which people value in this world, which is great. I think if I was a really money focused, heavily focused kind of person, it'd be different. I'd do different things. I'd be very like hyper, I don't know, just a different mindset. I think that's why a lot of people like, working at Finder and contributing, because, there is that purpose and it comes through. Otherwise it'd be, it's a different, you can be really ruthless in internet marketing and, give customers stuff which they don't really want. And I don't know I think just over the long haul, people will eventually, they don't mind Finder because they're like, hey, actually these guys are trying to like help. They're really trying, really genuinely come from a good place. And that comes out in the content. It's personable. It's actually written by people. It's edited. It's, it's people who are trying to genuinely help other people. I think that's, probably comes again from the founders, I guess. We're trying to create something. And I love that, this creation's turned into something amazing, which is great. I think it's just the beginning for me, but I feel I haven't delivered my biggest creation yet. I think it's coming. But would love to keep pushing towards that and manifest that 100%.
Fred, a lot of our obviously community are mum and dads and investors and people who are trying to find their way and get in control of their money and organise their money. You've obviously got a very, very strong growth mindset. Can you break that down for us in terms of how, what is a growth mindset in your eyes? So our listeners can build confidence and community can build confidence around seeing other people have success and potentially, taking on calculated risks in terms of their sphere of the risk profile?
I think the beginning is starting with a feeling of abundance, and that there's just so much out there, so much. I think fear of loss and uncertainty and doubt, I think can be very consuming, and it also it affects your decisions in a small way, and potentially it stops you from putting bigger size into investments and I think I have maybe a bit of a controversial view. I don't know if it is or isn't, but I believe in concentration of investments, not diversification of investments. I'm all about big size into big opportunities that you unfairly understand and know versus other people. I invest in tech stuff. I don't know anything about mining. I don't own any mining. I'm sure there are great mining companies out there, but I have no idea what they're doing. They're digging stuff up to the ground, they're shipping them off. Cool. I don't know how they work. There are lots of great companies out there, but I have no idea how they work. And I just don't invest in them. I invest in cryptocurrency. I invest in technology companies, internet companies which I understand. Really, my circle of competency is what I just stick within. And so then I could make bigger bets. For me, buying $100,000 of Bitcoin is like, cool, awesome. Like that's just normal. Doesn't really feel like that to me sounds like a great investment by someone, regardless of when they bought it. Timing for me is obviously it's nice to think you can time the market, but I just think I don't really think too much about that. I just find investments which I understand and I really lean into that. And I think from a growth mindset, a lot of that, and I write about this obviously in my book, and there's a lot in there about that. But I think the high level, trying to like condense it down for this podcast, because it's tough to go into everything, is I think that you can expand, that you can get more, that you can move forward, and I think a lot of people feel they're going to lose something, or there's obstacles, there's problems. My strong contention is, and I've experienced many, many problems, is for some reason, I just keep going. I don't know what that is exactly or why that is. I think it's just, and it's not to say I haven't had any downs, and I've lost money in cryptocurrency as well through certain investments as well. There was a big one recently. I lost 150 grand in like 2 weeks. US, it was just, it wasn't, I made an investment. It didn't work out. It is what it is, right? It's not like I used all of my stack, but like it was a pretty sizable investment. It wasn't nothing. And I think the way I've sort of started to get comfortable with that is stay in my area where I understand, focus on it and keep growing it. And then put concentrated investments into things that I believe that are, unfairly matched. And I think I just want to pick up on something I've realized in the last few days is when you think of something and obviously it's going to work, you just like in your area and you're like, well, it's obviously going to work. It's fully priced. Everyone knows it. I think what's really interesting is if you zoom out and for just a moment, think like if you went down the street and spoke to a whole bunch of people, and you told them that investment opportunity and they had absolutely no idea, I can assure you now that that investment is not fully priced. Most of the time it's not. In fact, you're just so deep in it that you assume and you're in this, echo chamber where all you hear is about that, then you think it's massive, but actually, and that could be a problem as well, investing sometimes in that. But a lot of the time when you spotted something and you invest behind it, you're probably well and truly underpriced and where actually it's probably going to go. And I think that's a cognitive bias, which I've noticed of myself as well. I'm like, so invested in some things and I realize they're obvious to me, but they're completely unobvious to so many other people. And then when they get to learn them and understand them, they're like, well, I'm definitely going to invest in that. And so you're buying so cheap in the scheme of things that you get outsized returns. I remember, I just regale a story. I was heard one the other day about Warren Buffett, and he asked Bill Gates when they first met. He said, the first thing he asked him when he met was, should I buy IBM? And Bill was like, no. Like this is like early 90s. It's like, should I buy IBM? No. Like, should I buy? And he said, what should I buy? He said, buy Microsoft and Intel. And this is like before Intel and Microsoft were massive, right? Like what? That's hugely in Bill's circle of confidence, right? Bill Gates, massively. He knows the space. But I was thinking about it, I was like, well, maybe people who understood the businesses, they would have priced them out. But then if Warren's asking him for tips about these two companies, clearly they're not fully priced, and I realize there are probably asymmetric returns in many different places. And I reject the efficient whole frontier of investing completely. I think there are inefficiencies in all markets, and cryptocurrency just provides an incredibly high amount of those. There's huge inefficiencies that you can leverage. I think there's in all markets if you get to the places, and any investor starting out and beginning, you want to find your area where you can find those inefficiencies, because that's how you build your stack, you build your capital, and then you can start to take bigger and bigger deployments of capital of that, and they build bigger returns. And then you can start to go up the risk curve because that's an area you're extremely competent in. For example, I invested and continue to invest in Bitcoin mining companies because I think they're an incredible bet. Like they're really an infrastructure play to some extent, but to me, it's protecting something which I deeply understand and I'm extremely invested in. And so I see it as basically the picks and the shovels. It's just the infrastructure that runs the rails of something I believe in. And that to me is just actually a very conservative investment versus, you can either buy the Bitcoin, you could buy the actual infrastructure. Well, at least the infrastructure is going to carry on and make a profit. So it's kind of actually a hedge, which it sounds bizarre. But that's something which, it has, I think it's provided some good returns for myself. And I think it's a growing space. And I think that a Bitcoin mining operation is kind of like a data center. And I don't think data centers are going out of business. I think there's going to be more and more data centers needed on this planet. Like I think we're nowhere near maxed out in data capacity. So I think, that's, I don't know if that sort of roundabout way sort of goes through my way of thinking.
Can I just finish off with one quick question, which was, when you are, because I don't necessarily totally believe in diversification because I'm heavily weighted in property, right? But when you are considering your investments, are you doing something like 2% completely at risk? In other words, if I lose 2% a bank on a totally speculative investment, are you looking at it like that on your range of investments as well, when you're looking at your overall nest egg?
I don't know if I'm that strategic. I just continue to get stronger and stronger and more concentrated into things which I really know. Fair enough. And actually start selling. I've sold off so much stuff, which I kind of knew it's done well, but I don't really get and understand. And I wouldn't know when to sell it actually. Whereas other things I see is, much, much deeper investment. I think when it comes to those speculative things, I think I'm more putting them into places which I understand, brand new coins in cryptocurrency, IDOs, ICOs, play to earn. Like, I'm looking at buying some spaceships right now. I know it sounds insane, but in the metaverse, I think it's a great thing to go and do. I think it's a great investment because it earns a yield. It's just the same as buying a piece of property. It's just you're buying a spaceship which flies around in space and earns money from the metaverse and cryptocurrency. It's just a it's an asset under management. It's the same thing. Just that it seems extremely speculative and almost, to other people, but to me that seems like actually a relatively conservative investment. You're buying just the spaceship. You can go way further than that. And that's an example where I guess it is relatively speculative to some extent, but actually in my circle of competence, that's a pretty conservative investment.
Okay. Fred, a couple of weeks ago, you and I chatted, we talked about your property portfolio and where that fits into the bigger picture. Clearly, you're in business, you play equities game, you talked about crypto. We'll come back to that shortly. But where does property sit in your thinking around bringing some of the success you have in your business world and parking them somewhere? I know that the investments that we talked about were largely owner-occupied investments for you, and you had some commercial. What are you happy to share your views on property and where that sits in the overall scheme of things when you've got surplus cash to make a decision on where you're going to put it? Where does property rank for that for you?
Yeah, I think property is an interesting investment long term for capital. I see it as a preservation of wealth. I think it's a tax effective way to do it in your principal place of residence. And in my view, but I think this is just my instance, my personal. It's just not financial advice. Obviously, it's just my personal opinion.
Yes.
I've got to be careful. I want a bit more liquidity. I need to be able to move in and out of things a bit faster because crypto moves fast. Certain stocks move quickly, and I have a lot of venture deals that I look at, and I need that free cash flow to be available. And I'm just I'm cycling a lot of money in that sense. I think in terms of property investment, I haven't done a lot. I haven't done a large amount. I see it as like a really long-term steady approach that I think is great. And I've bought and paid off lots of properties, but it's I had to hand over one in my divorce settlement as well, which was pretty painful. In North Bondi as well, which is a cracker of a suburb. If you can get any property in there. I think I would attribute property to, it has a capital appreciation, it's got a yield, and you obviously can borrow against it. So it has that ability to free up cash flow in that sense. And the rates you can borrow at are incredible. I'd actually leverage it in that sense. That's, there's actually a lot of returns you can make in cryptocurrency right now, relatively conservatively, and compound a lot of money that way. But the capital appreciation, I think, is the way I look at it right now today is I think inflation is out of control. I don't think it's correctly reported at all. And I think assets and housing prices I don't think they're going to slow down. I can't see interest rates moving for a long period of time. And so I recently made a very big property purchase. I'm sure people could see it publicly. And I saw that, but as I buy relatively unique properties,
that's for sure.
Yeah. But then I get to sit in my own pricing category. I get to choose the price, and I can be more of a price maker because there's nothing else in the category. And I think when, times are very favorable for property, and I think I really saw myself as number one, trying to solve for a lifestyle thing, which is not a great investment probably. But at the same time, I feel I'm extremely leveraged to the property market now as well, and dealing with this inflation problem in a cost-effective, tax-effective way. My previous principal place of residence, I rent out now, which is cool. But it leveraged me into be able to buy a bigger property, and this property has the potential for incredible yield as well, which is, it's great. And I can see myself. I think what's challenging, I can see myself moving around the world quite a bit in my role because of Finder's quite a global company, so it makes it a little bit challenging in terms of what I'm solving for. But during COVID, it was brutal. I was like, it was time to, I think, make a change. But the way I saw it was inflation's out of control. interest rates are low. What a great time to borrow money real cheap and lock it in and let inflation do its thing, so as that, it's not going to cost me nowhere near as much.
Did watching your mum over time do her property thing also give you that comfort?
I think she made some great investments, and she has made, over time. She made a few, I think some weren't the best. I learned from that.
Yep.
I think my timing might be quite, just a little more different, just purely because of, I guess, I've built a business, so it's a little bit different in that sense, how that operates. I don't think I would be, I think I could have been a better property investor probably. I'm just, I just bought a lot of stocks and had a lot of other options to make investments. And building a business was always my mum, whenever she built her business, she bought the property as well. So she was very intimate in that sense. And obviously we bought our office for Finder in Australia in the city, and that's done, quite well from that. And so I learned from her in that sense. But I just think I have a bit of skill in businesses. And I try and stick in my lane, you know what I mean? And try and learn from my mum as best as I can. And I probably need some of your coaching. You guys are probably much better than me at that. And I probably need some help in that sense.
We might be a bit boring for you, Fred.
Well, I think there's a place for all sorts of investments like that. But I think I stick in my circle of competence, and and I work hard at that, and I learn more, and I read a lot. And I think that's sort of how I've seen property in that sense.
Fred, we don't talk about cryptocurrency a lot on this podcast, and clearly from the conversation we're having with you, it's a passion of yours. How would you describe it to someone who doesn't get it yet? And so, number one, and number two is, why do you see such an opportunity in it?
Yeah, so I sort of had this view that I've recently started to, I sort of changed the way I sort of looked at it, and it really, I think hopefully it's instructive. But if you go back in time and think about the internet and when it was first created, it was really a media and a medium to digest information, to get information, videos, images. And that was really what it was. I didn't even think video was actually thought of in the beginning. It was more text and images. And if you were to imagine and go back in time of the internet, if it was first created and it had a currency connected to the internet, that would be cryptocurrency, where it's internet money. And I think that's, if you start to think about that, right? So I talked about before metaverses, I do think the metaverses are going to be bigger and bigger, and they're coming up right now. There are people playing computer games right now in cryptocurrency, and they're earning cryptocurrency, and they're making real money. And that's happening in massive amounts of people. And that's really starting this. What's the difference in earning money in a fake world versus a real world? Like if it's both real money and it feeds you and it pays you rent. People are paying their rent in crypto that they earn in these games as well in the Philippines, which is pretty wacky. So the way I think of that is, would you pay in fiat dollars in these games, or would you pay in cryptocurrency? To me, it makes absolutely no sense to pay in fiat currencies, which are in a different system. You want to all be in the same system, and you could just pay each other, boom, done. And I think if you subscribe to that world, to subscribe to a world of the metaverse, subscribe to the world of, having your money and storing your own money and being able to pay anyone at any point in time, not have a government controlled, or having an alternative to a government controlled system, then cryptocurrency is something you should have a look at. And the backup of cryptocurrency is Bitcoin. Bitcoin is digital gold. There's 21 million of them. It's a finite thing. It's backed up by so many computers. It's insane. And it's a miracle, because this is really hard, and it'll take a long time before, a lot of people understand this, but it is a miracle that it has this incredible brand with no CEO, no marketing department, no one behind it. There's no one to call. There's no one driving it. It was just a piece of code that ran, and then it's built this incredible global brand, huge network effect. it's got anonymous people who started, who hold 1 million Bitcoin, which is worth, billions of dollars, and they don't even use it. It's never been used. People don't even know who this person or people were. And yet it's built on that premise, right? And there's no one to call, there's no one to shut it down, no one to turn off the code. And yet it self-manages and self-regulates and continues to grow. That is a miracle of the earth. That is a miracle. That is like an incredible creation by humanity. And when you consider that, that's what backs up the whole of cryptocurrency. That's it. That is an interesting premise. It was built, that entire system, Bitcoin, was built because of after the global financial crisis. People basically had to pay for that. We had to all put in our hands in our pockets, and we inflated our money, and that stole money from people. And now those people, we're still paying for that, right? Whereas you go back in time, let's just go back to May 2021. In May 2021, Bitcoin was trading at $64,000 US. It pulled back in a couple of weeks to $28,000. That's a massive correction. If that happened in any other market, there'd be a government inquiry, some sort of thing, there'd be compensation from the government to put in their hand in the pocket to reboot this system or whatever it is. Did you ever hear any government being called about the cryptocurrency system? Was there any form of compensation paid to anyone? And yet this system continued to operate. It carries on today. It is a $2 trillion market. There is $14 trillion of US dollars. I think that's the total amount of currency that exists. The amount of space and growth of where we are today, this has gone way beyond a little experiment. This is now an entire world, entire system. And when I think about, Bitcoin and Ethereum, they're like sort of like the Microsoft and Google, like buying like the blue chips of cryptocurrency. They're not super exciting, but they're actually a miracle that there is no one driving Bitcoin. How could something exist and yet no one drive it? And that's because the community, the people that are using it, have all the value. Everyone who participates gets all the value. And that's a different mindset if you think from a centralized, government-controlled, banks, central place where everything happens and is decreed, where inflation is seen as like an okay thing, which is really stealing people's money. That's a very different world. And I think, and this is the thesis and why I'm so bullish, is that world and the current one are coming together in a very freight train sense. And this new financial system, I think, will start to be actually the system that everyone eventually moves to and feels actually that their money is not going to be deflated or inflated away. And there's a different, there's lending, there's borrowing already, there's insurance. I can buy synthetic stocks. I bought Coinbase stock before it listed on the stock exchange because it was trading in cryptocurrency. I can buy Google stock. I can buy all sorts of things immediately. And I can send currency to everyone, which is in my own control, that no one else is controlling, no government. And I guess what's tough to understand is, in Australia, those things are just seen as okay and part of the system. And anyone who feels, against that, and it's like, oh, this is a Ponzi scheme, this is against, all sorts of things. Well, what's actually cash? What's backing up cash these days? Nothing. It's just that's a great Ponzi scheme. That's the greatest Ponzi scheme happening right in front of us. Every asset really could be seen as a Ponzi scheme. A piece of property is worth something to someone else, and now someone else piles in the greater fool to buy it from you, and that sets the price and goes forward. They're actually all really Ponzi schemes.
All built on a level of trust.
All built on a level of trust.
That's right. That the system, fiat countries, the whole thing basically is built on. Yeah. So, hey, that was really interesting, Fred. Thank you very much for that. My final question just comes around. I may not have the risk profile of you, but I just want to basically do better. What's some of the things I can work on myself in terms of mindset or things like that, that's just going to give me better opportunities and open the world for me? Now, take that into the entrepreneurial space if you want to link it back to your great book. But just, what advice would you give someone who maybe lacks a little bit of that confidence, and how should they work through that mindset shift?
I think the first step is start small. I love small businesses, little tiny ones that make a little bit of money. I built, I think, 39 online sites, and before I built Finder, the 40th one was a success, I guess. Well, they all were little successes, but I love starting small. Small businesses are beautiful because they're nimble and they're fast, and they make a little bit of money, but they make a good profit, and it just stays beautifully there. And staying a small business is great as well. There's nothing wrong with that. You don't have to build a giant empire, but starting and building something small and being okay with that, I think is the first step. I think the second thing is, if you hit a mistake, you hit something wrong, every single person, I make mistakes every single day, literally just hit the wall. And I think if they can take something from that, hopefully it's okay to make mistakes. It's absolutely fine. And even if, when I think about it, I've made investment mistakes, the way I frame that and think about that, like building a business is just about capital deployment, right? You're putting capital into that as opposed to another different investment class. It's the same thing. But when I think about the mistakes I make in business, the way I frame that and think about it is that the business mistake is just the investment cost it took to build the company. Just sort of lump it in with the cost of startup. It was just part of it. That's what you needed to pay in order to learn. That's how I think of those things these days. I think the last thing when it comes to, mindset, I think this is something which it took me a while. I thought I knew a lot about stocks and I thought I knew a lot about investing, but wow, there is so much more to learn. Like I'm in beta mode and I'm a continuous student. Like I've only just bought, I think it was, common stocks. Is it Common Stocks and Uncommon Wealth or something? As a book. And there were 2 books that Warren Buffett suggested recently. And I was like, I have not even read these things. These are classic books. And I'm like, only just now beginning to read that. Like just the sheer level of, stewardship and, is needed, I think, to just keep educating yourself, keep rebooting and keep re-asking. I'm sure in property, there are brand new things that are emerging and new categories and new ideas and new approaches. I think that's something which has served me, is to be just a continuous student. Even in cryptocurrency, it's, I relearn things and I was like, oh, wow, I didn't really think of that. I didn't know that would work that way. Just continuously learning, continuously.
I think that's awesome advice. Something that I can definitely resonate with. My final question for you is around lifestyle design. And I guess the mission of our podcast is largely around how people can create a life that they don't want to escape from. And for us, it's clearly around getting in control of their money, investing it in some form of investment. For us, it's residential real estate. But the end goal is not the property and the money. The end goal is the lifestyle that they can create. So my question for you is around lifestyle design for you, Fred. You clearly, if we believe even half of what the papers say about your net worth, money isn't a problem for you. And clearly, in chatting with you for the last 30, 40 minutes, you've got an active, busy mind that's always looking for new opportunities and new things to do. But how do you factor lifestyle design into your world? What does lifestyle design look like for you? How do you check out and take time out for yourself in between everything else that you're doing? And what is the vision outside of money that continually drives you to keep getting up in the morning and doing what you're doing?
Yeah, I do. I love lifestyle, love experiences. They're what they're all about. I think the thing is, my experiences I love is small experiences. And one particular thing I do love is new experiences. I just love new things. It could be small, going to a new place, finding a new burger shop, seeing a new, it could be small, just like a new series that I've never realized, or, that's a lot of that's expensive for me, right? Time is very valuable. And so seeing a whole, a TV series to me is like, wow, that's a massive, like gift. It's like, I'm so grateful for that, to be able to just take that time. I think having the, ability to create for me is probably the biggest thing. To have the space to create something new, to create things which I love. That's important to me as a person, as an individual, not necessarily to everyone else, but that's what I love to do. I love to create things. If I can get those opportunities to do that, I'm super happy. I love it. I think once you sort of get enough income coming through and you've built enough assets, it comes back to, I guess, time and making decisions about what you prioritize and what you love to do. Like, I'm sure there are lots of people who could just stop working. All right, I've had enough. That's it. Like, I'm good. Thanks very much. Let's shake hands. Sell this whole thing to someone, take the money, and chill out. I've met people who are like that. They built a tech company. They sold it to Alibaba. They're super happy. Cool, awesome, and that's it. That was their journey. It's not really about that. It's about, that's just sort of like, this is valuable to other people. Awesome. It's actually the creation and the creative experience that I love. I just love to build stuff.
Yeah.
So I
can relate to that.
Yeah. Ben can relate. And that makes sense, right? Because some people don't see what they're doing as work, and it sounds like you don't see what you're doing as work, and it's just a continual opportunity for you to see new things, create new things, and that for you, creation is around commerce and enterprise, and it seems like you've got a gift for it. So I appreciate you coming on. As I said, you and I had a conversation a little while ago. I was intrigued to get some of your insights into what it's taken to build your business, your interests, what you're doing around property. It was great to hear your backstory with your parents as well. So on behalf of everyone on the Property Couch, thanks for joining us today, Fred.
Thanks very much. I appreciate it a lot.
And if I can add to that, in the show notes, we'll have all the information in regards to the great book that Fred's just released called Go Live. It's obviously a great book for business ideas and entrepreneurs in terms of all of the lessons that you've learned on your journey and how you've framed them up into a really great framework, Fred. So congratulations on the book. And again, thanks for coming on the podcast.
Well, thanks very much for inviting me. I hope everyone got some value, and I wish everyone incredible returns on their properties.
Very good. Thanks.
Cheers, mate.
Wow. There you go, Ben. What I found fascinating is just the level of thinking and creativity and where his mind was going. We asked him a specific question, and not only did he sort of get to the answer to the question at the beginning, but then just the where the ideas flowed and where his mind went after that, I found fascinating.
Yeah, I mean, the one thing I love about our long format podcast, Bryce, is our guests can deliver really, detailed answers, right? They're not necessarily sound bites. And you can start to, sort of get the gravity of how their mind works and how they're thinking. And I think, Fred's a perfect example of that, where there are lots of moving parts. And he's still, as he highlights in there, some new thinking that he's doing and some new observations that he's having, but really from an abundance mindset. And I think, that's my big takeaway for me in terms of approaching life with an abundant mindset is a great place to be. And he's being able to leverage from that to take risks, to have some successes, to also have some failures and acknowledging those and being really honest about, the purpose of when he first started Founder to what the purpose it has today for him and basically how it's changing people's lives. And I think from our point of view, we're all on a journey of learning, and that continual learning is really powerful. So I really enjoyed that.
Yeah, I love the continual learning. The other thing too is he invests in things that he understands and doesn't necessarily buy into the diversification piece, which is interesting because we're kind of the same, in terms of we like to stay in our lane. Residential property, we're very specific about the types of residential property that we like, but also we find diversification within the lane that we like. And we've talked in the past that you and I property is not our only investments, but it's definitely our preferred, our favorite. It's something that we're passionate about. So I found that interesting.
Heavily weighted, Bryce, is what they were. heavily weighted in resi property.
Yeah,
existing resi property.
This is true. But the fact that, he made a good point, you can make money in mining stocks, but I don't understand mining companies, so I don't invest in them. So he didn't say there's no money to be made in mining stocks. He said, I prefer to stack the odds, which I love. And I really love that in the context of our community too, because we feel like there's inefficiencies in the property market that if you have the understanding that we hope that we can impart in our community, they get to stack the odds in their favor as well. So just thought there was some really cool takeaways that you can apply. Clearly, not everyone listening to our podcast will be able to relate to what it takes to build a company that's across multiple countries with 450 plus employees and have that level of wealth. But if you can take one or two things away from what Fred said and use that as a guide for you to ultimately get to the point that I made at the end of the interview, which is the whole point is lifestyle design. And it's not he who dies with the most toys wins. It's he who has the most fun and has the most unique experiences and really enjoys every day wins. So he's living that. He just loves to do it in the property space, in the business space, which is fabulous. So thanks again, Fred. Again, we've got a mutual publisher, so appreciate Leslie connecting us so that we could have that conversation. My life hack today, Ben, is a homeschool hack with your kids. So clearly, as we speak, still quite a few people across the country are in lockdown. So therefore, there's a lot of homeschooling. And I've said it before, Ben, I'll say it again. It takes a village to raise a child, but a vineyard to homeschool them. So you need to have some form of ways to get through some of the challenges. So one of the things my wife has done, I really loved it, and it provided some real joy to me, was she set up this system where she had 3 pieces of paper, stapled them together, and she created this carton, and it was called the My Feelings box. And so when the 2 boys were about to just kill each other, right, start to pick up chairs and throw them at each other, and clearly something is raging on the inside with cabin fever, Andrea encouraged them to go and get one of these slips. And on the first page, it says, I am feeling, and there was a tick box. So I am feeling worried or sad or angry, like I want to cry and tired, right? So that they can identify the feeling that they're lost in at the moment. The second page is action. So what can I do? So the options are take 3 big slow breaths, go and read a book or write a story, make a cubby and play with my toys, jump on the trampoline, talk to mum and dad about how I'm feeling. So clearly we've tailored them from what we know is some of the outlets for them. And any parent who's listening to this or guardian who's listening to this, we'll just tailor that. And then the third is now I am feeling on the third page, and the options were happy, calm, excited, joyful, and proud of myself. And mate, the reason why it was so joyful is, one, it provided an outlet to just cut the circuit, right, of what was going on. But 2, at the end of the night, Andrew and I would go and read these things and just get these wonderful little insights into these little humans who just fill our life with joy most of the time, but at the time of some of these slips being filled in, the cabin fever was kicking in. So that's my little life hack today, Ben, if for parents and guardians who are currently still in lockdown, still homeschooling. And for the record, I've got 1 back at school and 1 still homeschooling because I'm in regional, and because of the age bracket, my youngest could go back, my eldest couldn't. So we still have a bit of a hybrid of both, but there is definitely people doing it tougher than me all across this country where kids are at home. So hopefully that might be a little hack that you can use. Ben, thank you. What's making property news?
Well, mate, I came across this article that you shared, which thank you very much for that. It was along Jonathan Thurston. Now, Jonathan Thurston, for those people who don't follow the NRL, is a superstar. 3-time Daily M, just an absolute superstar. Now, he has revealed to the newspapers that he lives off $300 per week. So that is look, it has to be it's not his overall money. I mean, I want to put some context around this because people will be saying, because remember, when you are a professional athlete, you normally get fed at the club. There's a lot of things that you would also have now. He's a commentator, and so there's probably other support services getting around that. But $300 a week, and he's been doing this since the age of 17. So his sports manager, put him on to this idea, and it's basically meant that he's being able to build a successful story around his wealth, and also develop habits around how he looks after his money. So for me, I really found some really great takeaways in terms of, for me, that's the living and lifestyle, mate. There it is right there. That's his little $300 that he gets as his
7-day float.
Fund. Yep. Yeah. And the family also gets fed when he's traveling or whatever for his media commitments, or when he was a professional athlete. But that's healthy, right? $300 is enough for him to still be able to enjoy things, but he's also then being able to pocket those other funds and build a wealth story for him and his family. And he's got some nice little toys in there as well, as he outlines basically how he's building up his wealth.
A multi-million-dollar share portfolio, a 50% stake in a Queensland transport company, 8 pieces of real estate, a Ford Mustang, and which is a limited release. So he shunned the reason it cost, and I've got to shout out to Francis Rivero, who is our TPC listener, who's been with us for a long time in our community. Flicked me a note, Ben, just to bring it to our attention.
Yeah.
But what I loved is the community read this. Francis read this, and then he knew that it resonated with what you and I have been talking about for 6.5 years.
Yeah.
And then we share it. So it didn't matter what the pay packet was. It mattered what the build of just this opportunity to create ongoing passive income and lifestyle, which is amazing. So you wouldn't have known that about this superstar of the game.
Very switched on operator.
So very, very good. So, well, mate, we've covered a bit today. It's always good to get a guest who shares their time and shares their wisdom. And again, we thank you for that, Fred. But mate, we've got another special guest next week, so stick around for that. But until next week,
knowledge is empowering, Bryce, but only if you act on it.
See you next week, folks.
Hey guys, Bryce here again. Just want to catch you before you go and let you know, if you're new to our community, there are a lot of episodes to catch up on, but it's really important that you start from the very beginning at episode number 1, because episode 1 through to 20 share all of the foundational pillars and frameworks that you need to know to get the best out of listening to this podcast. So I'd recommend that you start there, and the little tip is to maybe start on 1.5 speed. Now, for those of you that are time poor and don't have time to go back from the beginning, don't worry, we've got you covered as well, because we've created a binge guide that goes through all of the details and makes it easy for you to read and get up to speed very, very quickly. So if you go to thepropertycouch.com.au/fast track, you will be able to download that binge guide and you will be up to speed in no time. And whilst you're there, I've got a few extra goodies for you, because we have our top 5 frameworks that you'll learn on this podcast, as well as the Make Money Simple Again ebook, which will help you with the foundations of basic money management, so you'll have everything you need to succeed in building your own lifestyle design and getting the best out of this podcast. Now, just a reminder that anything that we cover on this podcast is not considered financial advice. We certainly recommend that you get your unique circumstances looked at by your individual advisor, and everything we talk about is just general in nature. But folks, I want to encourage you again to go to thepropertycouch.com.au/fast track, and you can go and get all those goodies and catch up right away.